Hello, this is Brian Resney. It's question and answer day. And today I thought I'd talk about one of the major mistakes I see investors make all the time, because I've been getting a lot of questions from my TV and radio show listeners about not making much money on their portfolios. In fact, we've actually booked a number of appointments over the last few months from people that listen to my TV and radio shows that tell me, Brian, the last 3 to 4 years I've made virtually no money with my current advisor and I'm looking to change. Let me tell you what happens. Investors, unfortunately, don't look at the fine print when they sign up with most advisory firms. They don't really understand the kind of services they offer. Let me explain. Most investment firms, Wall Street firms, banks, and insurance companies offer typically what's called asset allocation, this pie-shaped investment process where it's kind of a set it and forget it. The investments are spread all over. Every kind of a conceivable asset is often encompassed within that pie. The problem is you don't make any money. At least that's what we see. The reason is they're trying to hedge their own bet. These Wall Street firms, banks, and insurance companies essentially are trying to keep your volatility down a little bit because they think that's going to keep you happy. While that may keep you happy in the short term, the problem is, folks, if you have zero volatility or very little volatility, you're probably not going to make any money. I'm here to tell you the truth. If you're trying to make a return on your money, all assets are going to go up and down. The key is have your money invested in asset categories that are relatively strong in performance and relatively strong in earnings potential. If they are not, then you've got asset allocation. You're spread amongst weak assets and strong assets, which basically waters down your net return. Sure, you might have a little bit, 2 or 3% less volatility, but at the end of the day, you're not going to make any money, or you're going to make virtually little money, and then you're going to be disgruntled. Again, you need to take some degree of volatility. I'm here to tell you the truth. There's no free lunch in investing. So if you're trying to make returns that are 6, 8, or 10%, you've got to take a little more volatility. There's no guarantee to the future. But I've been managing money for 30 years, and I can tell you in the last 8 to 10 or 12 years, I've seen more people come to my firm because they're not happy not making money. They are starting to realize and become smart and educated that being too cautious, too conservative isn't going to pay the bills. If you're looking for a difference, call Resney Wealth Management. It's time you schedule the consultation. Let's make 2017 a better year than 2016. Find out the difference my firm offers, active money management without the conflicts of Wall Street. Have a safe and profitable day.